Bobby, if you just confessed to going to 4 Kiss concerts in full makeup in the 70s,
Yeah.
sorry.
Listen, I'll proudly say that on the recording. I don't care about that. What I care about is people don't take my dad wrong when I say that, an immigrant Italian father watching his son put on makeup to go to a concert was a little bit of a struggle for him.
It was. By the way, there's another guy, a third guy sitting here who happens to be way smarter than all of us. You guys know him, Brian Wesbury, who's the chief economist for First Trust. I argue, not just because I like him as a human, I argue that his takes have been more on than any other economist, let's call it over the last 10 years. I think he's brilliant. It's not just me saying it. Libertarians I've seen Rand Paul cite him. I've seen Ron Paul cite him. Brian Wesbury is the man. Thank you for coming, Brian. That's the last nice things I'll say about you, by the way, so don't get used to it.
All right, that's great, Jim. Thank you very, very much. Great to be on with you guys. I hope everybody follows both of you on Twitter because it's heaven to read you
very
guys.
Much. Good.
Really
Let's get right to it because like Brian, you just said it. You just saw me do a hit on Fox. Normally, I'm an optimistic guy. I've been optimistic for 20 years. I believe in the Warren Buffett. You don't bet against the American economy, et cetera, et cetera. And I think, the stock markets tend to go higher. There are companies that are trying to shed non-performing assets, trying to build up performing assets. Right now, I don't like the market at all. I think that on October, I think it was 13th, you might correct me on that, when that 30-year auction came out and the market said, no, we don't want to buy your debt at 4.8. Well, the best we can do is 4.85. To me, that scared me, made me think that there's big things going on. Where am I wrong? Where am I right?
Yeah, I think you are right. First of all, to go back to what you started with, like if all you got to do is look at history and you mentioned corporate management, what do they want to do? They want to grow their company for the most part. Some of them want to be activists, but they want to grow their company. They want to please their shareholders. They want to make profits. They want to pay their workers. When you add technology into that and the era we live in, what a great world to be. But that doesn't mean the stock market goes up each and every day, each and every year, each and every quarter. I think especially now, we went through COVID. The way I talk about COVID is we had a car wreck. We broke our leg in 4 places and the ambulance shows up and pumped us full of morphine. And then they take you to the emergency room and they go, hey, how you feeling? And you go, man, I feel great. And they're like, you're not great. All right. This is going to hurt. You're going to have a lot of physical therapy. But I think, how do you lock down an economy and have people feel no pain? And so what I believe is eventually we're going to feel that pain. And we're almost out of the money they printed, almost out of all the money that they spent. And so that's going on. Then Russia and Ukraine, I know that's background noise now. Then Israel and Gaza. Then, exactly like you said, the 10-year, gets close to 5%. The auction, people balk. And I think this is what caused like this correction or bear market that we have. And I actually think it's a continuation of the bear market we had last year. So I'm right with you. Even though I'm an optimist in the long run, that doesn't mean you can't have bear markets in the middle. And I think we're in one right now.
So Brian, I just want to point out that we're recording on October 30th, and you guys won't be watching this or listening to this until Monday, November 6th. But in that context, we have 3 central bank meetings this week. We had 2 last week. We had the Bank of Canada and the ECB. Actually, we got 4 if you count Norway, but I don't really count much about Norway. Which one of these, in your view, is the most interesting? I think it's the Bank of England, but why am I wrong, or why do you agree with me?
Yeah, I think it is the Bank of England. Europe and the UK, they're even more on the edge right now than we are. I mean, I just read a story today, Siemens in Germany. I know that's not the UK, but Siemens is asking for 16 billion of bailout loans because they're losing money like crazy on all these wind farms they're being forced to build. So if you kind of look at Europe in general, and I would include the UK in here, they have taxes that are way too high, regulations that are way too high, government spending. They're pushing them in the direction of clean energy, and they're trying to fix it with monetary policy. And their inflation has not come down like ours. Ours still isn't as low as it should be, but it hasn't. And so, yeah, what they do is going to be really important. And if you look back over this last 15 years, central banks have created a whole new world of monetary policy. And I don't want to get too geeky in here, but what they've started to do is literally just make up short-term interest rates. And here's kind of the way I put it from the U.S. perspective. If you had $33 trillion in debt and you got to make up the interest rate that you paid on it, what would you set that rate at? And the answer is 0, or in Europe's case, negative. You get paid to issue debt. But eventually, if you do that, you're going to blow up. I think that's what Jim's kind of talking about. We're in the process of the market realizing that this has been crazy. And so, yeah, I look at these central bank meetings. They're all important, but they're done in a context of this massively changed monetary policy where they're manipulating interest rates like never before. And I think we eventually pay a huge price for that. So no matter, in a sense, what they decide this week or that, they're in an environment where they're paying a price for trying to manage everything. And the government can't. The more it tries, the more things fail.
I don't know if you guys, Bobby, I don't know if you saw it either. Stanley Druckenmiller.
He's drunk on
Did I say
highlights.
that? Okay, good. So he had a
Yeah,
blistering
that was right.
takedown of Janet Yellen recently in an interview. This is what he said, and I paraphrase a tiny bit. He goes, over the last 5 years prior to the last 2, he goes, every caddy I knew, every person I ever speak to, regardless of where they are in life, rolled over their debt into duration. They changed their 3-year mortgage into a 30-year mortgage. The only single entity that didn't do that was the federal government. So my question, you just said about manipulation, this is a 2-part question. One, are they going to manipulate rates when they realize that 1.2 trillion of debt service is new based on what rolling over in 2024? And is there a 0% chance that this is economic sabotage to try to usher in the new world of central bank digital currencies? Am I absolutely crazy to think that there's a chance that that's it?
No, I don't think you are. So let's just walk through this sort of the way I think about it. They set rates at 0. The Fed held rates at 0 for 9 years out of the last 15. The federal funds rate was below the rate of inflation 85% of the time over the last 15. And I believe that was designed to pay for the subsidies that we were giving EVs, solar, wind, all this Green New Deal. I don't want to sound like a crazy person, but The Great Reset was a book written by Klaus Schwab, and Build Back Better. And so if you're trying to remake the entire economy, isn't it a lot easier to do when you're holding rates at 0? But eventually you pay a massive price for that. And that's what we're seeing today. The second part of your question, are we moving toward a national bank and a digital currency? And my answer is that's all part of Build Back Better. It's all ESG fits in there too, because if we had a national bank and a digital currency and they could do things like Trudeau did to the truckers in Canada, they could control where money goes. It doesn't go to fossil fuels. It can't go to guns. Whatever political position you have, if it's on the wrong side, they'll make it harder for you to fund. And then I just want to back up one quick second, because I don't want all of us to sound like
I'm about to jump. I'm on the 4th floor here.
You know?
I'm wondering if that's high enough to do the job. But anyway, go on.
Yes. Here's what I always remind people. Alexander Hamilton wanted a national bank, and he got one. Now, back then, we didn't have the technology to track all the transactions, all that stuff that we have today. but he got one, and then it failed. And then we went to private banking, and then we went to the gold standard, and then we invented the Fed, and then Nixon took us off the gold standard. America and other countries all around the world have experimented with different ways of managing money in the banking system. So I don't want anybody to think this is just all a modern day conspiracy. It's kind of goes along in our historical attempt. But here's the underlying part of all that. Governments forever, for thousands of years, the Romans clipped coins. Every government that gets in control of monetary policy, to the extent that the Fed is right now, or the Bank of England, or the European Central Bank, they abuse money. And that's one of the reasons why we've had these 10-year yields leap so much, why we have inflation that we haven't seen in 40 years. It's because we're abusing it. And it's not new. It's been going on forever and ever. And I sure hope that one of these presidential candidates that's fighting against the digital currency and a national bank wins, because we have to avoid going there. We need a free market banking system to go along with a free market economy.
So, Brian, and one of these days, I think, again, we got three conservatives on the show.
By the way,
there's always two.
We're just centrists. We seem like conservatives because we're not nuts. Okay, yeah.
Right. Well, Jim, I don't mean conservative in the political sense. I mean we're three fiscal conservatives, right? I mean, conservative doesn't mean Republican to me. It certainly does not. And a lot of people will say that, right? They'll say, oh, you're a conservative, so obviously you like fill in the blank, Bush, Trump, whoever it is. And I disagree with that completely. I think conservatives are capitalists. I think we believe in free markets and things like that. And Jimmy and I, Brian, just for the record, almost every show, Jimmy and I talk about how we're socially liberal. I mean, we are. Gay marriage, weed, smoke them if you got them, whatever the saying is. Yeah, I don't want to pay for any of it, but do whatever you guys want to do. Right. The reason I bring that up is because I wonder, I had a friend come in from New York this weekend and stay down here at our house in Florida. And every time he comes down here, he just breathes a sigh of relief. He's like, it's just so nice to be in Florida. Yeah, I just don't have to worry about anything. I say what I want, do what I want. And I mentioned that you were going to be on the show. And he was like, oh, God, I love Brian from when he was, where was he? This and that. And it took him to another subject. He was at a large institution that I won't mention. He was director of treasury. And he said, I loved our economist. In private, he was center right to right. He goes, and he would give presentations to clients, and then the clients would call the banks and complain about his views, saying they were conservative. And the economist would go back to his superiors and say, they're not conservative, they're just what I think, and they've been correct. Speaking about you brought him to that story. Yep. And we had you on our Ethics in Economics sort of super show with Bob Stein and Joe Livornia. Yep. Have you seen any of that personally in your career? Because your long career has always been, we need to do things the right way under free market capitalism. Right. Have you seen that in your own personal career line where your sort of centrist conservative views have hurt you, helped you, or anything in between?
I would argue they've helped me, but that's because if you kind of look back at my employment history, if you will, I've worked for people who believe the same way. We don't believe that hiding the truth of the way we think is the right thing to do. I mean, cancel culture is disgusting. It's ugly. I have the interest of all human beings in mind, because in the end, free markets and capitalism and freedom and personal responsibility are the best way to get growth out of individuals, the best way to increase living standards. That's what I want. I think liberals, they may have another agenda. I don't know, and I don't like putting that on them, but I think they actually believe the policies they propose are going to do the same thing, but we can prove by looking at history that they don't. I will tell you, I have a story going all the way back to the Harris Bank in Chicago. Sears was one of Harris's big clients. And if you remember, when they moved to Hoffman Estates, northwestern suburb of Chicago, the state gave them, I forget what the number was. This was 25 years ago, 30 years ago. was like $200 million of tax breaks to do that. And they were a good client of ours. And we wrote about it. And man, did the top execs at Harris Bank come down on us, because we said it was wrong. The state of Illinois shouldn't be giving them $200 million, because that meant other citizens of Illinois would have to pay for it. But boy, did we take some heat for that. And I think actually Sears stole some business from us. So this has been going on a long time. I've stuck to my gun. I won't change. Thank goodness I work for people who believe the same way and have a constitutional fortitude to keep it up.
So I'm going to rant a little bit here, but I do have a question at the end of this, because one of the things I love about Jimmy's Twitter specifically, and one of the things that you do in a lot of your posts, and those are always the ones I retweet, is you basically word your tweets and your posts and your blogs and everything else you do in a way that, like, this theme behind them of don't get mad at me, these are just the facts. Right. Jimmy will actually say that. He'll say, It's time to remind everyone again that this is objectively true. They didn't need to shut down the economy. That's a favorite of yours, Jimmy, which I love. When that kind of thing happens and people start, I want this particular show to be at the forefront of correcting financial and political language. Forget about all the other stuff. We don't have time to take all that on. But correcting language like conservative doesn't mean Republican, like conspiracy theory, which was first kind of introduced into the public lexicon around JFK's murder, right? Which I think we can all, I don't know if we all agree, but a lot of the things that were conspiratorial became true. It's just a hypothesis when things don't pass the smell test. Right. It's not a negative when you say, I have a conspiracy theory about this. Then everybody's like, oh, tinfoil hat, you're a Trumper, you're an anti-vaxxer, all this crap. I don't remember what the question was, so I'm done.
You take a break and I'll come back. And I appreciate that rant very much. We just laid out a scenario where rates could stay high for a while. The government has no intention of hitting the brakes on selling bonds, none at all. And the Fed doesn't have any intention of hiking anymore, in my opinion, because they think that the federal government is pushing rates up. Right. I don't believe the stock market, when all of a sudden you take 5% off the top where you could get as the safe rate, I don't believe the stock market is going to do well. And I think that could be for several years. I'm looking at gold, Bitcoin, and oil. What assets are you looking at?
Okay, I like energy companies because if you look, I mentioned Siemens already. Siemens is going to the German government right now for a $16 billion bailout. They call it a loan. They're losing massive amounts of money on this, on the wind projects that they've agreed to do. They're one of the leading producers of windmills, power stations in the world. And so they're going. The EV manufacturers, they're all over the news. I mean, I think it was Ford just lost $3 billion. All this stuff is coming to a head. And I think what it shows is that we've been crazy. We're not going to meet California's goals of 100% EV cars by I forget what year Gavin Newsom said. It's not going to happen. We're going to use more energy in 20, 30, 40 years, fossil fuels than we are today, unless some miracle happens. And so far we haven't seen it. And so I like energy companies. I think gold is it's fully priced. It's not overvalued, but I think it's fully priced. And so I don't mind holding some of it, but I wouldn't make it a big part of a portfolio. And if I were to kind of put us right now in a place in history, and I know that's hard because we've never done the COVID stuff we did, it would be more like the late 90s, because we have the Magnificent Seven, which have driven up the stock market, made everybody think we're in a bull market when there are a lot of stocks that aren't. And then if you look at I'm not saying we're a dot-com bubble. Like, that's not what I'm saying. What I'm saying is I'm hearing arguments like back then, Joe Battipaglia or Abby Joseph Cohen, people like that were saying we're never going to have a recession again. And today it's AI is going to fix the world. And to me, those are really similar arguments. And then I go and look at what happened in 01, 02, 03, and guess what? S&P was down big, but low vol and value were up. And I think I would include energy stocks, healthcare stocks in a value kind of portfolio today. And so I'd be a little broader than just the inflation hedges like Bitcoin and gold. I also think the pendulum's swinging back. The Biden administration's building a wall, for goodness sakes.
Isn't that racist? I was told it was racist. I'm joking.
I mean, the pendulum's swinging back. And if that's the case, then we're going to have a bear market, but then it'll fix itself. And then finally, we did this work. Like if interest rates, and I think we did it when the 10-year was 4.5, and I get it, it's moved from then. But if we have a 4.5% 10-year, we need a 42% increase in profits from where we are today to make the market at fair value. So this is the first time in like 13 years that I've said the market's overvalued. And I don't see a 42% bump in profits from where we are today. And so therefore, I think the downside is greater than the upside.
Brian, 650,000 people went on strike this summer, approximately. Yeah. More than 2018 and 19 combined. I think you probably throw a third year in there and still be close. What do strikes do to economic data? Like, where do you look? Where do you see them, and then where do you see them correct when those people go back to work? And I'll throw my follow-up in now. Right after the UPS thing settled, a cousin of mine drives a truck for UPS. He was all thrilled and blah, blah, blah. And then they announced a layoff of 1,500 people a little bit later. So what is the economic effect of these strikes with these high raises as well?
Yeah, so great point. I mean, you kind of just made it. Initially, employment goes down because when you're on strike, you're not employed. And then they have to shut down factories, so we lose industrial production, ISM. And then when they're solved, all that stuff reverses. But the pain of raising pay by 25% is going to reduce business investment in the future and lead to layoffs. I mean, I don't know how Ford keeps their EV plants open. They just reported $3 billion in losses. That's just Ford. We have all these other companies too. They're building cars for more than they can sell them for. The demand isn't there, and so these strikes came in the midst of all of that. But then, if you agree to these big pay increases and cost increases in an environment where you can't make profits anyway, it's going to force you to completely change your business. So yeah, we get the short-term kind of moves from the strike and the reopening, but then in the long term, it just raises costs, and people are already having a hard time buying EVs because they cost too much. This is just going to make them cost more, and the government can't afford subsidies much anymore. So it's really either. I mean, there are a lot of people talking about auto manufacturers having to get bailed out at this point. I'm not sure if we're there already. I'm not an auto analyst, but I don't think we're all the way to that point, but it's heading that way. And the resumption of the deal that they had to cut to end the strike is just going to push them even faster in that direction.
You know what's funny about that is they lost $3 billion. That's 33% of the $9 billion loan.
Stole it right out from under me. Yeah.
Well, I'm just saying, Jimmy, you and I have talked about this all the time. Is anytime the government picks a company to lend to, it's almost 100% that they waste that money.
We're not seeing a dollar yet. I'd be willing to wager anyone that we're not seeing a penny of that money returned. If we do, it'd be ridiculously long time from now, and then they'll say, "See, we paid it back." Despite the fact they got an interest-free loan for whatever. Do you see the Fed stepping in to compress long-end yields to bail out the federal government next year because debt service is going to be too high? Is the Fed going to expand its balance sheet next year?
You know what? Here's the this is obviously the bazillion-dollar question. Is Jerome Powell Paul Volcker, or is he Arthur Burns? And if he's Arthur Burns, they're going to step back in. I think we're going to have a recession. I don't know how we avoid one. I used at the very beginning that morphine analogy. It's wearing off. The pain is showing up. You can't lock down an economy and not pay a price. And so I think that comes next year. And if Powell folds like a cheap lawn chair, they're going to start QE again. They're going to cut rates, and they're going to try to bring all these financing costs down. The only problem is when Arthur Burns did it, it just led to more inflation. We are repeating in so many ways the 1970s. You know, the Fed held interest rates below the neutral rate, the normal rate for almost all the 60s and 70s. And what ended up happening is that all these savings and loans made 4, 5, 6, 7% mortgages. And then the next thing you know, Volcker's charging them 15% for deposits, or forcing that by raising the federal funds rate. And the entire S&L industry had negative net capital. I'm not sure you can say that about the U.S. banking system as a whole today, but there are certainly big banks out there, regional banks out there that have such big losses in their portfolio that it exceeds their capital. And that's exactly what happened in the 70s. So we're kind of in that same spot today. And it's what's interesting about this is that once we elected Reagan, cut taxes, regulation, slowed spending, and Volcker fixed inflation, we boomed anyway, even though these banks were still in trouble and had to dig their way out of the hole. But that's where I think we are. And then the question is, does Powell respond to it and fold like a cheap lawn chair? Or is he the biggest, baddest maple chair in the world, and that's Paul Volcker, and he doesn't change, and he just says, the heck with it, we're going to pay the price and fix this. And unfortunately, it's a forecast. I wish I could forecast Powell.
On this show, every week we work the Mike Tyson quote in. Everybody has a plan until they get punched in the face. And when I think of the Federal Reserve, and they've never failed in this. Like I remember, one time we're going to hike rates. Stock market cracked 7% in a couple of days. The case for hiking rates has changed. No, nothing's changed. You just took a glancing blow from the stock market.
Right.
And I think that's the real deal. Now, we always say to people like, "Oh, you're so political." Bullshit. I don't think I'm political at all. We like to talk about policy. I don't know anything about politics. Some of the policies that I'm seeing right now are asinine to me. Do you think, with an election coming up, that there's enough groundswell support for, I'm not even going to say austerity, but to get more adults in charge of spending, or are people just blind to that?
I guess part of me is really hopeful. I just read Don Quixote.
Speaking of windmills, you call that progressivism, where now we're going back to windmills? Anyway.
Yes. Well, that's what I feel like sometimes, because I would love to say, yes, we're going to cut spending and we're going to do that. And then I really sit back and I go, I'm just Don Quixote. This is an impossible fight. I'm with, I heard everything you said, Bob. Jim, you've said it. And I'm with you. I call myself a libertarian. I really care about the fiscal side, the economic side of free markets. That's what I care about. And I get mad at Republicans and Democrats. I mean, I don't know if we've ever talked about this, but I still believe that TARP was one of the biggest mistakes that Republicans have ever made since Herbert Hoover signed the Smoot-Hawley Tariff Act. All right. And the reason I believe that is that along with TARP came QE, and then that became the model for dealing with a crisis. And then when COVID came, we just did TARP and QE times 3. And now all of a sudden we've had government spending. I mean, when George Bush came in, government spending was, without defense, was about 15% of GDP. Today, it's 25% of GDP. That's what the financial panic and then COVID did to government. We have never seen in the U.S. that kind of increase in the size of government. We're going to only grow 1.5% a year if we don't cut the size of government. So I certainly hope that that's what happens.
That wasn't the question.
But like I said,
that wasn't the question. Do you think it will happen?
Actually, I believe, I believe Republicans will win in this next election cycle. I also believe that the pendulum is swinging. Let me put it this way. Jimmy Carter, this is kind of fascinating. In the tail end of his term, it was so bad, he was trying to do anything to fix it. He cut capital gains taxes. He appointed Paul Volcker.
Wow.
It wasn't Reagan that appointed him. It was Jimmy Carter, and Reagan unleashed him. All right, there's a difference. And then he also appointed a guy named Alfred Kahn to take over the Civil Aeronautics Board. And he's the only guy in history to ever take over a government agency and then get rid of it. Like, he was a true anti-regulation guy. Came from Cornell University. And so I'm not trying to say Jimmy Carter was a great president. He was awful. But at the tail end, he made some choices that led to Reagan. And so when I see them wanting to build a wall today, when I see elections in New Zealand and Australia like we've just seen, when I see this guy who quotes Milton Friedman beating Justin Trudeau in Canada right now, I have hope. And so I'm going to say yes. I expect us to start heading in that way in 04, 06, and 08. The pendulum will swing. And that's why I think we're going to have a bear market now, and it's going to hurt. But I do believe in the next 3 to 5 years, we're going to be at all-time highs.
It's interesting that Pierre, I don't even want to try and pronounce his last name.
Yeah.
Oh, was he with the guy with the apple?
Polivier or something like that.
That was pretty.
Yeah,
Yes,
the Apple
yes.
guy. That Apple video, man, I retweeted that with a quote that said, "Can he run for Canadian Prime Minister and U.S. President at the same time?" Like, I would actually merge the country to get that guy for 4 years to watch him do it. But in terms of the Bank of Japan meeting, which again will be over by the time anyone's watching this, there's talk of them adjusting sort of the path of yield curve control. And again, while everybody's watching this, they'll know exactly what happened already. The yen just keeps getting hammered day after day after day.
Right.
I asked this of our last two guests. It was Luke Groman and Nancy Davis. Is the Fed going to keep rates higher by playing around with QE, QT first? Is that likely to be their first move? And I likened it last week to, a husband goes out at night and tells his wife he's going to be home early. He gets home at 4 a.m. and she said, "I thought you were going to be home early." "Oh, I am home early. It's early in the morning." And Jerome Powell can continue to say, "We said we were going to keep rates higher for longer," and then exercise some form of yield curve control. And by the way, what the hell is the difference between quantitative tightening and yield curve control? Is there a technical difference?
Not really. I mean, with tightening, they're actually putting more pressure upward, I guess. This is going to sound weird, but I've never believed that QE or QT themselves can really manipulate for very long interest rates. I think what can pull the longer end of the curve down is when the Fed holds short rates down. So for example, if the Fed said we're going to hold the federal funds rate at 0 for 5 years, well, then that would mean that the 5-year Treasury ought to be 0 as well, because it's 5 years of overnight rates of 0, the 2 years 0, the 3 years 0, the 5 years 0. And then that means the first half of the next 10-year is 0. And then you have to guess what the second 5 years is going to be, and that'll give you the 10-year yield. So I feel like what they did is they pulled the whole yield curve down by artificially managing the federal funds rate. It wasn't really QE that did it. It was more zero rate policy. And so the bond market will see the Treasury issuing all this new debt. They'll see the Fed not buying as much or buying more, and that will influence traders. But over time, it really depends on what they're going to do with the Fed funds rate.
Quick question. And so here, there's exceptions to it, because this is one of those rare occasions when I disagree with you, and I don't like disagreeing with you. But answer me this: if we believed fully, like let's say they got to plug up their ass and they went up 100 basis points in the next couple of months, and the market was dead set sure that they had overdone it on the short end, don't you think that would invert the yield curve more, and that long end rates could conceively go down?
Absolutely.
So there's exceptions.
And by the way, so yeah, well, it depends on where you are in the tightening cycle. These days, I like to tell people I'm old enough to remember what an interest rate is supposed to be. All right, and it's supposed to be inflation plus 1% for the Treasury, plus 1.5% for Apple, something like that. If I look at all the measures of inflation we have today, Cleveland median, CPI, like all of them, we have 3.5% to 4.5% inflation. Add 1, we're 4.5 to 5.5, which is about where everything is. Short rates are right there. The 10 years right there. But if they went up another 100, that would mean they're tight in those rates. And then I think you're absolutely right, Jim. That would send the signal that they're too tight, recession's coming, and the 10-year would likely go down in yield, and we'd get a more inverted curve. So yeah, I think it all depends on where you are in the cycle. And when they're holding rates at 0 and kind of promising to do it forever, that's what pulled that whole yield curve down. And I think it also happened in the 70s. So it's this a little bit of art and a little bit of science, but
Brian, you do watch policy quite a bit. You've worked in the federal government. FDR banned gold in 1933. I believe it was some sort of emergency act, I believe, wasn't it? Do you think that could happen again? Where they literally, well, I think it will happen with Bitcoin personally. That's my problem with holding Bitcoin rather than trading it. I'd rather trade it than hold it.
Yep.
And I've done that and I've made money on it. I think they would do that with Bitcoin. I almost see it as a certainty, to be honest. And then Bitcoin, in my view, only becomes a drug currency or the illegal economy will use only Bitcoin at that point. Do you think they could do it again, or you see signs of that?
Yeah, I definitely do. Here's kind of an interesting thing right now. Bitcoin's so hot. Cryptocurrencies are so hot. People are loving them. They trade them. What a lot of people don't realize is you owe taxes. So I think the government is perfectly willing to let these things stick around, to allow ETFs to come, because they can collect tax revenue on this stuff until it becomes a competitive, or it looks like it might be competitive to, let's say, a central bank digital currency, or money itself, all right, dollars itself. And that's when they'll hammer it. And by the way, one of the things I always tell people is they will never let you pay taxes in Bitcoin. And all these states that claim they, or the cities that claim they let you pay taxes in Bitcoin, they don't really. You send it to a third party. The third party translates it into dollars. They send the dollars to the states. You can technically pay in Bitcoin, but the state is never accepting it unless they seize it in some kind of illegal operation or something. So, I always read these stories. The Treasury owns $1 billion of Bitcoin. Yeah, well, they seized it all.
Here comes the curveball and the counterpoint to you guys, though, is that I will make my case. Do you believe that BlackRock is above the government? Like when BlackRock applied for their Bitcoin ETF, I'm like, spoiler alert, it's going to get approved. BlackRock bought the government fair and square. They own it. They have the deed. They have the title. So now here's my question then.
Right. It's already listed, Jimmy. Did you know that their ETF's already listed at the DTTC? It's already up there. It's just not tradable.
So this is why I would push back on you guys. But the reason I increased my stake in Bitcoin, I don't even know what the hell it is, nor do I care. If Bitcoin, who are the overlords, my daughter, who was an exec at a big blue blood company in investor relations, one time said to me, she's no longer there, so I don't think she'd be mad about me saying it. We're just talking and exasperated. She said, Dad, every one of us, you included, works for BlackRock and Vanguard, so don't for a second think you don't. So that to me scares me. Is there any credence in that, or am I just being my tinfoil hat guy, Brian?
Yeah, you know what, Jim? I'm going to punt on this one a little bit. We compete against them. I will tell you, I like it when they push ESG because we win. But I'll leave it at that. They manage most of the government's pension funds. So their power in this arena and their links to the government give BlackRock a great deal of power. And so why wouldn't they be the first one to get the ETF exemptive relief? Good for them. But I think my bigger point was, I think the government's perfectly willing to allow it as long as they can collect tax receipts from it. And then the minute the benefits to the government of having Bitcoin trade exceed the potential costs of them losing, like remember, if we were on a Bitcoin standard, they could not have done QE. So they don't want Bitcoin. because they want to be able to do QE. They're in this weird spot where they kind of let it be because they can make money off of it. But I still think they crush it before it becomes a real currency.
Before now, I'm surprised that they've let it go to where it is. It competes with their game. They want to be the only game in town, and it competes with it. Robert?
Yeah.
It's funny. I agree with both of you on those points. My question, Brian, and you too, Jimmy, on this is like, Brian, you're an encyclopedia of like financial history. Like you pull things out of the top of your head that then I end up looking up later to learn about. And I may be putting you on the spot a little bit here, but has there ever been a case, because we all agree the ETF is going to get approved. BlackRock's ETF is going to get approved. And then it's just a matter of there'll be an avalanche of other ones. There's already some. There's Grayscale's got one. ARK has one that they've submitted already. So there's just going to be an avalanche of these things. But from there, I think Brian and I agree that at some point, the federal government is not going to let Bitcoin compete with the dollar. They're just not, whether it's a digital dollar or a regular dollar. They're not going to give up the monetary system. And the more we go down the path we've been going down politically and policy-wise, the more people don't trust the government. It's a survey that came out just this weekend that red or blue, 70% of the people don't trust the government anymore to do the right thing. Didn't matter whether they're Republican or Democrat. So that's why I'm so convinced at some point they will say this is not a currency and you can't use it as such. And when they do that, if they do that, do either of you guys know of any example in history where something like that's happened? The closest I can think of, and I don't know if it ever happened, is prohibition with any public liquor companies that may have existed at the time. Like what happens to their stock? Do they get delisted? What happens to these companies? What happens to the ETFs if they then outlaw Bitcoin in some way, shape, or form?
I always have looked at Bitcoin like scrip, okay? And I don't mean to demean it. It's a really cool idea. But during the Great Depression, we truly had a lack of money. Like there were shortages of cash. Banks were failing. And so if you're in Janesville, Wisconsin, there's just not enough cash. Like in the city. And what they did is they invented scrip. Like a farmer could sell his crop in town and get some scrip and then go get a haircut or
multi-party
like whatever.
barter.
Yeah, it was barter with scrip, right? But the problem is you couldn't take that scrip to Chicago and stay in a hotel because even though you're only 80 miles away, it's too far. They wouldn't recognize it. But at least Bitcoin, it's accepted all over the world. The question is, if government never accepts it to pay your taxes, can it really be money? Because in the end, you got to convert back to dollars to pay your taxes. So they can always weaken it. They may not kill it all the way, but they may not do any business with it. You can't do a government contract. You can't pay your taxes, and government's huge. And so if they take away 25, 30, 40, 45% of the value of having a scrip, a piece of paper that says it's worth something, then can it really be money? And that's where I think it'll still exist. I just don't think it'll be treated as money.
So I got something for both of you. And actually, Jimmy, you first, I think, because you have something physical that you could do this with. I knew a guy years ago, and he made all his money in the 70s and the 80s with a barter company. And all he did was, like, he would call American Airlines and say, do you guys need any Volvos? I've got some Volvos. And they would say, yeah, we'd like to give our executives company cars. Okay, great. I'm going to send you a dozen Volvos. You send me the equivalent in airline tickets. And he would take a bunch of airline tickets and one Volvo for himself. And there was no cash transacted at all. I don't know how that worked on the balance sheet. I don't know how it worked, but, whether their auditors thought it was legal, I don't know. But he made a lot of money doing this because then he would sell excess airline tickets and he would sell his Volvo that he just got given for free. And that's where he made his income. And the rest of it, he kept a lot of his fees. Do you think that can make a comeback in the kind of economy, Jimmy, that we have now? Like you can trade.
Well, that's what I was going to say. When we
all day long.
Opened the restaurant 11 years ago, we were contacted, wink, wink, by many different vendors, construction workers, car mechanics, going, no, let's come up with a system. We uh, let's put this in case anyone's watching. My partner is German. He's by the book. He's no, no, no. Me, I'm Italian. I would have been like, hey, let's talk. But he's the managing partner, so he made the rule. I always say we are everything by the book. We don't cheat at all, which is against my will, by the way. We're the only goddamn restaurant in Cook County who doesn't cheat on something. But I think there's a barter system that's alive and well in towns, in small businesses, and I can only see that growing as people grow accustomed to poor stewardship of our currency. You just mentioned lack of trust of our government and anything to avoid taxes. As soon as we go offline, I will tell you. I could tell you guys a couple stories that you guys would laugh about, but I can't go public with them. Brian, what do you think?
Right. Yeah, totally. The black market has always existed. In times like this, it gets even more so. And especially now that government is saying anything over $600 that you use Venmo or Zelle or PayPal for, it's going to get reported to us. So people always look for a way to avoid the expense of government and while they do business. The simple like rule of thumb, and this is, I don't understand why people can't see this or think like this. We pay taxes. I'm not against taxes as long as I get a benefit that is equal or greater to the taxes that I pay. Same reason I buy an iPhone or anything. But the minute you feel like you're paying more than you are receiving from being part of a society, a governmental, constituency, you're going to want to leave. And one of the ways of leaving is not only, we know people are leaving Illinois, California, New York, all that, but the other way of leaving is going to barter, cash under the table, and you can't use PayPal or Venmo anymore. So I'm certain there's a lot more of this going on because the cost of government has increased so much.
I wish I had the
statistics,
but starting after the financial crisis, the amount of $100 bills that were being requested and circulated was growing exponentially. Now, there's some people maybe wanted to store money in cash, but I always thought that that the only people who had a whole stack of hundreds, and this was before the hundreds became 50, which now with this inflation. But I always thought it was gamblers or drug dealers, or traders who thought they were big shots, and I have a pocket full of hundreds right now. But well, I think it's interesting, and I think we've had a lot of interesting things.
I literally remember the day when myself and a buddy of mine, it was a late October in Chicago, and I still lived in Chicago, probably around 2018, where a buddy of mine were lamenting that you can't leave the house for less than $200
crazy.
anymore. Like you just can't. You go out between drinks and dinner and maybe a drink after dinner or dessert, whatever. Next thing you know, it's like, really? $280? It's like, that's when I started getting really mad about going out. My buddies would be like, we're going out for a drink. I'd be like, are we doing anything else? Because I don't want to wake up hungover and light $650. I didn't even have that much fun.
Well, I wanted to cut this off, but you just hit on a good point. So the question becomes, when are these higher end restaurants in certain areas going to start doing poorly? I'm in a different financial situation than most people. And I've asked my wife if we could stop going to, there's 3 restaurants in the northwest suburbs that are better than everybody else. And you pay for it and they're great. And I wanted to dial back from going to those places once a month to once every 3 months. When are they going to start to suffer? And is this partially just because there's still an extra $2 trillion that has been force-fed into the system above trend, even that trend that was a ridiculously high slope after the financial crisis? Is that still what we're seeing lingering? Is that going to dry up soon, Brian? That'll be the last question, I swear to God.
Yeah. Then let me, I'll make it quick, and because some of this is numbers and it's boring, but the Fed from February 2020 until right now, they've put $5.4 trillion into the economy. GDP during that same time is only up about $5 trillion. So to me, that means there's still $400 billion that we haven't quite absorbed. Other economists talk about it as excess savings and things like that. But I always go to the root. Like, where did those savings come from? Well, they came because the Fed printed all that money. So we have that. And then on top of that, and you hit on it, in 2022, last year, the budget deficit was $1 trillion. Somehow, COVID's over. We have 3.5% unemployment. Somehow they were able to lift it to 2 trillion this year. And so you have the 400 billion of extra money and the trillion of extra deficit spending. And I do think that's kept these excess savings rates, or however you want to think about it, the consumer in the game. But my belief, and I try to measure these things and look at all our spending and how much we're absorbing, I think we've absorbed just about all of it. And I know they want to fund Ukraine and Israel and build a wall, and I believe all that's about getting more money to spend. But there is no way in 2024 that the budget deficit's going to be bigger than it was in 2023. So in other words, I think we're done. I think the morphine has worn off, and that's why I think we're going to have a recession.
You just went through your September 6th, I believe, tweet that made us reach out to you and say we need to get you back on to discuss it. You just answered that. Real quick, I know Jimmy's got to go. You got to go. What is your base case right now? Is it stagflation? Is it reflation? Is it recovery? Is it deflation? What's your base case?
It's kind of stagflation. I think underlying growth, gosh, I mean, remember the 20 years after Reagan and then Clinton, we had 3.5% real GDP growth. And that was our underlying potential growth. Now it's like 1.5. It's like European style growth. So that's the stag. The inflation side, it has come down. It's off its peak, but it's still nowhere near 2%. And this is where I punt a little bit. I don't know how to forecast Jerome Powell perfectly. And if he's Arthur Burns, then that inflation rate's going to go up in the next few years. And it's real stagflation at that point. If he's Paul Volcker, then, man, that's great. Inflation will be down, but we still have to shrink the size of government to get growth up. So stag for sure, depending on whether Powell is Volcker or Burns. And
whether he can take a punch or not. You can work that back in right now.
Yep. Perfect. Whether he can take that punch.
Brian, someone that's watching it is going to put a comment under wherever they watch or listen to this that we just had 4.9. So why are you saying 1 to 1.5? Well, just clarify that.
This was a weird quarter. By the way, I mean, this gets a little geeky. Remember, schools were closed for the most part for 2 solid years. So if you look at back to school spending in like July, August, September, it was non-existent. And I believe that's and so what happens if we have these seasonal adjustments? I think the third quarter was artificially lifted by first of all consumption, second of all inventories. This is the strongest quarter that we're going to see in the next 8. And in the last 2 years, growth has only been 1.8, 1.9%, even including the big quarter. So what I'm saying is ignore that big quarter. It's not real. It's not. I don't believe it that the economy is that really.
Thanks so much for coming on. It's always good. I love First Trust. I love all you guys there because you speak your mind and you say the truth. And it's not like some of these other guys who you can tell have some sort of corporate oracle looking over them saying, watch yourself. And I appreciate that. I've never met your CEO, but he seems like an excellent guy. And I am saying in a roundabout way that he should definitely sponsor our show. Bobby, you got anything in closing or no?
No, I think that was perfect.
Good. Thank you guys very much. Have a great day, Brian.